journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, this is the silver market. We've been watching this for the last several days. We have completed the 61% retracement today at 33.13.5. That had to be lower than the left shoulder, which it was. So far, the high of the day was 13.31.14. So if you sold it at 13.13.5 or 13 or 12 or 10, you've now got a nice $500 profit in it. Your risk is still 6 cents or 10 cents higher, so your risk is very small. You should be covered right now. Let's just look at this on a really short-term basis. We'll see. Yeah, see, we've already started to come down a little bit. So this is where it made the high. That's been going lower. So put your stop at the break-even point if this works. And, we don't know whether they're going to work or not. So we'll do that. I know there's a lot of questions about the stock market, and we've got time to answer those before Stan comes on. But to me, what's happening is not unusual, folks. I've seen this before in the dot-com stuff, so not a problem. Now, let's take a quick look at a couple other markets that we have been following that look really nicely. First of all, this one is just about ready to complete right now. This is the natural gas over the few days. You can see the higher bottoms that we've had in here. There's a number right here within a point of that number right now. So keep an eye on that there at 339, and it's 337.5. So watch that one for some interesting things to be happening. The NASDAQ is made new highs, blew through the roof. So we're going to take a look. We're not going to worry about this. First of all, we'll do we'll do the stock indices first, and then we'll move on. Okay. First of all, we're going to look at the S&P. Has a tremendous move up here. We're almost to our old highs back here, folks. I said, we sold it right there. Okay, at 61.10. Put your stop at 61.10. Yes, I see that it's had this big run up, but sometimes, I don't know. I said to buy it. If it gets above 80 is what I said in the video last night. That didn't go out like it should have because of something that Google changed, and I didn't get it. But I said if it gets above 60.80, which would be above the yesterday's high, I said it's probably going to go up, and put your stop there. But I'm still in it. I have my stop at my break-even point, but I'm also in short the Dow Jones. And if you look at the Dow Jones, you'll be able to see it's a really, really bullish chart. Look at this on the day, folks. Is that bullish or what? Why don't we look at it on an hourly basis, okay? How bullish is that? Hello, operator. All we were able to do was make a 61% retracement of the previous high. Folks, all this is being done by 25 to 30 stocks, and you know the names of them, and they're going nuts, and they should be going nuts. I'm not in the business of the nutcase game, okay? I'm trying to keep my losses small. This is a downtrend. Yeah, we might kick that out a little bit, but there's going to be one hell of a lot of resistance here at 382 in this Dow Jones. I don't know if it'll hit it today or tomorrow, but it's going to have a lot of resistance there, up about 200 points from where we are right now. That's my opinion, and if you pay more than 2 cents for it, you've overpaid. So let's look at the next one, which is the Russell. This is another one that's just absolutely screaming to the upside. Here's the hourly chart on the Russell. There's where we are, okay? Now you can see from the previous highs that we made back in here, we're going to go back and move it over like this. Our high was way back here on the 25th. Remember the 25th? Okay, now if we clean that out, just get rid of all of them so you can see where we are. From that high down to this low, the 382 came in to almost exactly to today's high. Now it's bounced back and forth, but there's today's high, and that's it. So this is not necessarily a bullish chart, in my opinion. But the one that everybody's watching, and if you look at those NASDAQ stocks, it looks like a green tote board at one of the betting parlors in Las Vegas where everybody's betting on the fight or whatever it happens to be. But we'll take a quick look at the NASDAQ anyway, because it destroyed all of the old highs. Let's get it up here, and we'll take a quick look at it. It's right after the NASDAQ. There it is right there. There it is right there. As you can see, we have gone up, and we have shattered the old highs by a great deal. There was the old high that we had here the other day, and there's what we've done. Now, you see we came down yesterday. You can see they had a pretty big move to the downside, and let's just check and see if there's anything that relates to what we talk. Shut the front door and raise the rent. Get this in here. There's your AB leg right there, and your CD leg comes in just about right there. Misses, but let's check the 382 because this has been a monster. Move it over a little bit. Well, there's your previous low right there. So let's just see. I think that's it. Yeah, there's your previous low right there. Let's see if that was a 382 this morning. I haven't checked this, so we'll see. Well, it missed it by 10 points, 15 points on that, and now we're continuing to go higher and higher and higher. Early this morning, I was watching the AI on this thing because I was working with Tom Hugard on this, and I thought that the top was going to be a high right here at around 10:30, and you can see that it didn't last for very long. There was that small ABCD right there, and it's continued to go higher. So this is, just some information, the technical analysis of stuff that I look at. Sometimes it works, sometimes it doesn't. Okay, get that out of the way here. And now we want to look at some new trades that are coming up. I've already posted the one on the natural gas. Look what we've got going here, folks. We've been very, very bullish this for quite some time. And as you can see, it continues to go higher. This is the crude oil. We looked at it on the heating oil. We looked at it on the natural gas. They're all going up the same way. And remember, over the last few days, we've been watching these 382 pullbacks. Those were the things that we've been watching. You see, well, I'm going to do them again because most people don't particularly look at this, but there's your first 382 retracement right there. Okay, then you have your second 382 retracement that is going to be right there. It's a higher high off the bigger low. This one misses it by a couple cents. Then we have another one right there. That's the one that's moving it up right now. And you'll see if you go from your last low to your high, there it is again, and there's where we're going. There's the big daddy rabbit up there, folks, your 1.618 expansions on two different swings, and that's where we're going to be heading for, which is another 50 cents higher at 70.40 to 70.36 in the crude oil. Now, that's what we're watching here. Okay, now let's take a look. Currencies still heading in the toilet. Not much to do with them. As you can see here, we keep going lower and lower. Today, this is the action from the other day. We rallied up there. You can see there was your 382 off the other one. What did it do this morning? It went to the 50%, still heading lower. British pound doing pretty much the same thing. So those are the ones that we're watching here real early. And here is a real interesting one that happened last night that I thought was quite exciting because we had some news come out on the Japanese yen, and the market broke really hard. And I want to bring it up to you to show you what happened. We went down and we went to I believe it's a 50%. Let's get this. Hey, let's take a break. 877-927-6648.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, I'll bring this chart up of the Japanese yen. It's the second largest currency behind the euro against the US dollar. Some type of an announcement came out last night here at 4 in the morning, 2 in the morning my time. I was up at 3 and I saw this and I posted this. I think I did in the video. Actually, I'm sure I did, but this is where it had this move. Whatever it was, it must have been perceived as bearish originally, and then it wasn't. You see this range right here, folks? When you have the market go down like this, John Hill called this the yum-yum, and what he did was, if you take the high to the low, once you go above the 786 with power like that, that means yum, we're going higher. And boy, it certainly did. As you can see that's a real interesting one. Now, since that time, we haven't done very much. And when you look at this on the hourly chart, you know, it's back up almost to the 60. Whoa, it hit the 1.618 expansion this morning. That was the high. Wow. Just notice that. That was 152.70, and the high was 152.70, spot on. Let's just look at that again to make sure we're not missing something. By golly, there it is. And we get above here, there's going to be lots of resistance at this level, I would think, at 53. But that's where we were this morning, right there. We might still get there, so keep an eye on that one. Let's put that beeper in there, because we start getting above that one, then you got some real things going. And looking at this on the 4-hour chart, you can see this is nothing more than a bear market rally. There's those numbers we were just looking at right here, right at that 153. You got to take a look at that. But that's the dollar versus the yen on a 4-hour chart going back over the last month or so. All right, now we got another trade setup coming, so stay tuned. Hold on one second. Stan will be our guest here in 10 minutes. We've got all of our vegetables rotten and fresh, getting ready to throw at him, because I've been getting them all morning. And we've been talking about it's not. You have to be able to laugh at yourself in this business, or you're going to be gone in less than a month. Hold on one second. Let's get this out of the way, and we'll take a look at the corn, because there's talk about a perfect setup, folks. We're looking at one right now here coming in the old. Let's get the daily up, because that's where it's on, is the old corn market. And boy, we're getting close. Here's where we are right now. All right, we got the live trading coming in on the 25th, okay? On the 25th right here, there's where we were 2 weeks ago. We bought that low, and our profit level came up here. We got hit, okay? Now we're dancing with the devil up here at the 78% level, okay? So here we are coming in on Wednesday. I got Thursday, and then Friday's our live trading. I'm hoping the trading gods will keep us below 452, so we'll be able to sell it around at 452. It's 451 right now. That'd be a really nice place to go short. We might be a little bit higher, but it'll be in that ballpark. But you have to wait till Friday to see if that is going to happen. Okay, now we had one other one that's been working for us, which is the soybean meal. We still got a little bit more to go on the profit side on that. We'll get the hourly chart up here. Take a look at that, and it's moving up there nicely towards it. So all we have to do is to just wait and see. We bought this down here at 93, if you remember. 93, that was those big ABCDs down there, went a little bit lower, and here we are now. We got a $600 profit in it, looking for another 400 up here at 301. This would be a really nice one for if the trading gods can do that. As you can see, you've got double ABCD patterns in here, and there's where we're going to be looking at 301, 302 for a potential in the soybean meal to take profits in that and possibly even go short. If we look at this on a smaller time frame, you'll see you pull back. There it is right there, folks. 302 knocking on the door. What is that? 382 is right there, boys and girls, if I can ever get this thing to work. They tried to get me to get this to fix it today, but it just doesn't work for the old cowboy. I just don't do well with technical stuff, folks. There's just no other way I can tell you. Can't get that to move, so I'm not going to worry about it at all. All right, now before we have stand on, let's get to Mickey Mouse and its players. We're going to take a look at the MAGA stocks because they are going gaga goo goo upside down up. So we'll take a look. And the first one we're going to look at is get it up here. Window. Hold on one second. I need to cascade this thing. We'll look at Mr. Appel, who's going through hell. There it is right here, making another new high, far above. You can see gapped up, and now it's still gapped, going higher. That's number one. Number two is NVIDIA. It's actually moving up on the day after being down. Okay, that means it's still going higher. And then we got Google making an all-time high right here, as you can see. This morning, back up against that old number again. The big target on this was 195. And where's it at? 195.57. We were looking for 195.57. The high has been 196.76. So maybe that's a high, maybe it's not. Here's Meta. Meta, who's got the peta? I was a poet and don't know it. I make it rhyme every time. Don't have any idea where it's going, folks, so find somebody else that does. All right, Amazon making a 1.618 expansion on the weekly. On the weekly. There it is right there. 231.69 is the 1.618 on the weekly. The high of the day is 231.20, and there it is right now, 231.13. So very interesting here. Here's Microsoft. Softy is a little soft compared to the others, but you can see it's still up today, moving nicely, bouncing up against the 78% level, making that a sell Gartley in this particular case with a very, very low risk, of course, but that's what you're watching with that one. And then we have to look at Avco, gapped up, looking pretty good. Billy Ray, and of course a lot of selling coming in on Tesla today, as just a few moments ago, Mr. Elon Musk hit the $400 billion net worth. $400 billion. Now you know why he's a Republican. I don't know about that. There's what we have here. This thing, I have no idea where it's going, but I look at some of these patterns on some of these things. This is like looking at the .com stuff, back in the days of where does that one come in here? Right there. That comes in at 425. We'll be there in a few minutes, folks. Just be careful or be patient. It'll be there very, very shortly. And then, of course, we have SMCI, which it's in the prayer mode. And that's pretty much, by the way, folks, send a little white light out to Peter Leides every day. He's fighting with the old Big C, and I think he's going to be able to beat it. But a little white light from everybody would really be quite helpful. Okay, we'll get out of this. And hold on one second. And the layout, get back to where we want to play the game. And we have to talk about one of the really interesting ones that we've been waiting for. Hold on one second. just a second. And I don't trade this, but by golly, I watch it, and I want to show it to you right now. This is coffee. Now, here's coffee. This is look at this moves that we're having in coffee, folks. These are tremendous moves. Now, all I can do is just show you what I'm watching. Okay, it goes up and makes a 1.27, okay, of that move right there. For December 3rd, that's 60 cents in coffee, 30 cents. Yeah, 55 cents in coffee. That's a $20,000 move. And then since that time, it's been coming down sharply. No 382s anywhere in here. If you can take a look at them, there wasn't one there. There wasn't one there. There wasn't one there. And there's not one here. So there's nothing here to give you a chance to short it because, well, you just go at the market and watch it go down. I guess you can do that. Let's take a break. We got the main man coming up, Mr. Stan Harley. And
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
we'll be marching to the river, hand in hand with the Lord. Stan Harley, how we doing, buddy? We're the only two bears left on Wall Street. I'm still there, but boy, I'm worried about you. Are you still hanging in there with me?
Well, I'm still hanging in there, Larry. Indeed.
All right, brother.
Indeed.
Let's show us what you got. I had to have you on, Stan, because I had so many people saying, this guy's nailed every high and low for the last 2.5 years. What did he do wrong this time? I'm saying, for God's sake, he's only 2 days away. You got to give him a little break. Go ahead, Stan. Please continue.
I saw your discussion with Peter Elides yesterday. Very, very interesting.
Make sure you say some prayers for the dude. He's got to fight in the big C. He's a great man. We all met him at the same time.
Yeah. Wow. Well, let's get into some charts here. When you and I were on the air about a week or so ago, I thought we were getting close to some kind of a high, and that day was in fact the peak in the Dow, and the S&P topped out the following day. However, having said that, I am bothered, shall we say. I'm bothered by the fact that we don't have what I call domestic divergences. We have divergences involving some of the European indices. For example, the United Kingdom FTSE, the French CAC 40 index, and a number of others have already seen their highs. If you compare, for example, the US Dow and S&P to the ACWX ETF, which is the all-country world index, something I track, the majority of the world's stock market indices peaked out a number of months ago and have been heading lower, and they made a lower high as we made a higher high.
Yep.
So there are some divergences worldwide, but we don't have what I call sufficient domestic divergences. And what I mean by that, I track what I call the big five indices. For me, the big five are the Dow Jones Industrials, the S&P 500, the NASDAQ Composite, the Dow Transports, and the New York Composite. And with the exception of the Dow Transports, which recently made a lower high compared to what it did the other 3 years ago, the rest of them have essentially made highs within a few days. And one other index, which is not a price index, but it's something I track very closely, is called the Advanced Decline Line. It made a new high along with the New York Composite. Generally speaking, and I use that term in italics, we tend to see the AD line top out ahead of the New York Composite. And then with the rest of the indices going to new highs, the AD line reflects a lower high. That hasn't happened yet. It's not a mandatory prerequisite, but long story short, I don't think we're there yet, Larry. I think there's some more to go. And I've got some new targets here that I'm exploring right now. The research is not fully developed, but I'm going to share it with you, with the group anyway. Long-term perspective. I heard you talk about this with Peter yesterday. Actually, this is my work, the 92-year cycle. I've got data going all the way back to the first day of trading in Amsterdam when the stock market was initially founded. And I have taken that data, put it into the program for the Foundation for the Study of Cycles. It's called the Cycles Scanner. And the cycle scanner finds that there is a cycle spanning 92 years. And one can see it over here where my mouse cursor is. It ranks all of the cycles within the data, and then the AI portion of the scanner ranks them in terms of 1, 2, 3, and so forth. The number one cycle in the data series is 92 years. And here's the waveform in pink. And I have annotated the yearly peaks, 1649, 1720, 1835, 1929, and I put 2024. I now think it's probably going to be the early part of 2025. Let's look at the monthly data. And we've talked about this before. This is kind of a rehash, but it still merits emphasis. When I take the monthly data of the Dow Industrials and put it into the Cycles Analyzer program, it determines the most dominant monthly cycle is 41 months. As you can see, there's the number one and 41 months. And this cycle is not new. This cycle has been around a long time. Edward R. Dewey in the early 1940s found then the dominant cycle affecting equity prices was 41 months. And it's still operable today. And as you can see, it is indicating that we are right in the window for a peak in that cycle. Now, it's not telling us the exact month. There is some variance either side of that peaking waveform, but the takeaway is we are in zone. We are in zone. And now I use other techniques to try to narrow this down a bit further. This cycle, interestingly, does not show up in the cycles program. The program doesn't compute this cycle. But I found that emanating from the low point in December of 1974, major market low by the Dow Industrials, all of the significant highs from that low have been marked by a cycle spanning 150 months and its Fibonacci perturbations. So, for example, from that December 1974 low to the right in time, 150 months, that aligned with the August 1987 high. Another 150 months aligned with the early 2000 high. And then from that point forward, Fibonacci perturbations of 0.618, 1.236, 1.618, 1.764, all aligned with all of those major highs. And then what I've done is I've put all of them into a spreadsheet and done what's called a regression analysis, which is a mathematical technique that finds the best fit to the data series. And then I compute a linear equation of the form y equals mx plus b. You remember from algebra in high school? And what it tells me is, yes, we have a cycle spanning about 150 months with a standard deviation of 1 month. And it's projecting the next reversal point in that series for December 2024, which is where we are right now, with a standard deviation of 1 month. So what does that mean in layman's terms? It means look to December 2024, plus or minus 1 month, 68% probability of a pivotal turn. 2 standard deviations would be a 95% probability. 3 standard deviations would be a 99% probability. And that's the very, very best you and I can do utilizing mathematical techniques like this. We'll pick it up on the other side.
We have to pay a few bills, my friend, so stay with us, okay?
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back with Stan Harley, the Harley Stock Market Letter. Please continue, Stan.
Oh, Larry, I was looking at that picture of you. You are one handsome dude.
That was about 75 years ago. One more update like today, and I'll have to wait another 75 years to pay for the next one.
Hey, look at the market. The S&P, NAS, very strong, but look at the Dow. The Dow's only up 30 points right now. And it's way off the high from the last time you had me on. Let's take a look at the weekly charts here and drill this down a little bit further. Here is a cycle that spans about 155 weeks on the weekly chart. And what I did here is I looked at the last 25 years, and I found all the pivotal turns lined up very neatly with the major Fibonacci ratios. And I put the 0 point right there at the low we saw on February the 11th, 2016. And then I went both left and right Fibonacci ratios, and all of those pivotal turns lined up pristinely with that date. And what it does is it tells me to look to the mid-January time period for the next turn in this rhythm, assuming it continues. And it may not, but if it does, that's what it's telling me. I drill this down a little bit more, and what I did is I took the time period between the January 2022 high and the present time frame and just expanded it. And this is what I found. Here's the January 2022 high, and notice all of the lows, every single one, every single low that we've had here on the daily chart lines up very neatly with, actually this is the weekly chart, lines up within 2 weekly bars of the major Fibonacci ratios of 0.146, 236, 382, 618, and so on. So I plugged those dates into a spreadsheet, did a regression analysis, and it tells me to look for the potential for the next pivotal turn in early January. And a standard deviation on that is just slightly more than 2 weeks. Slightly more than 2 weeks. So we're not there yet.
Okay.
This is a goodie. This is something I just stumbled upon recently. And what I found is a rhythm in the market that is denoting all of the significant turns that I've highlighted here, and they all expand by a factor of 1.618, each one of them. So for example, Over here on the left, the Dow Industrials made a low on April the 2nd, 2018. The cycle actually goes back to the left in time before what I show on here, but I just took the chart back to 2018. And the next low that we saw on December 26th of 2018, that time period, multiply that time period by 1.618, and it lines up within a day or two of the February 2020 high. Take that time period between these two pivotal turns, multiply by our good old friend 1.618 again, and it lined up exactly to the day of the high that occurred in January 2022. And if we take that time period between these two bars and we multiply again by 1.618, Larry, it lines up with January 24th. So methinks that time period, which is pretty close to Inauguration Day, might merit watching very, very closely. But that's a very, very interesting Fibonacci 1.618 series expansion on the charts.
Well, it sure is, that's for sure. Wow.
Fascinating. I know that's something you look at a lot and talk about it in your work. Let's look at the daily data. Here's a cycle that I've talked about on the air with you a lot. 80 trading days. This goes back several years. And like clockwork, every 80 trading days, a couple of times, it skipped a beat, and the next iteration, the 2.00 iteration, marked a pivotal high. The last occurrence of it was right here where my mouse cursor is, which is July 16th, 2024. 80 trading days later was November 11th. And you had me on a number of times prior to that date, and I highlighted that area thinking that that might possibly be the next turn in this cycle. Well, we had a minor downturn, and then we picked back up again. Well, if we take that 80 trading days, and instead of multiplying it by 1, let's multiply by 1.618. And what do we get? Wow. The regression analysis says January 22, January 2020, January 22nd, he meant to say 2025, with a standard deviation of 3 trading days. Interesting. Look, the 80-day cycle is suggesting January 22nd, plus or minus. The Fibonacci 1.618 series expansion is suggesting January 24th, plus or minus. The 155-week cycle, this one, and the longer term one also point to the time period right around Inauguration Day in January. So the research that I'm sharing here is not fully developed, but at this point in time, going on the air with you here on December the 11th, I'm going to be razor focused on that time period for potentially the high that you and I and others have been doggedly stalking. Now, what I want to see are divergences. I want divergences. And if we get to that time window and we don't have significant divergences, then maybe that's not the high. But I think the final high, when it comes, needs to be associated with what I call significant domestic divergences. And we don't have those yet.
Okay.
We got a little time. I was hoping.
What would be a big divergence? I mean, between the Dow, those 4 big options?
Yeah. What I call the big 5. Yes. I focus on what I call the big 5 indices. The big 5 are the Dow Industrials, the Dow Transports, the S&P 500, the NASDAQ Composite, and the New York Composite. And among those 5, I want to see as the topping evolution unfolds, I want to see one or more of those start falling off the new high list so that when we get to a final high, maybe only 2 of them go to a new high. And then, wouldn't it be nice if the advanced decline line did not go to a new high? And then wouldn't it also be nice if we didn't have highs in the European indices? I hear the music.
Okay. Stan, thanks for joining us, my friend. Enjoy the vegetables that they threw at us today. I certainly enjoy mine. I eat salad for 2 weeks thanks to this show. I love you, buddy. You'll be back soon. We'll have you Thursday and Friday this week, okay? Thanks, Stan. God bless you.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, a couple of trades triggered off while we were off the air. You can see here that the natural gas went up to our price there at $23.40. The high was $23.40.70. Your stop on that would be about $200. The silver's working really nicely now. And those of you that are short the Dow and also the Russell, the 2 weakest of the group, you can see they've done nothing but, move lower and lower. Keep your stop working in the S&P. It still has a 10-handle profit, giving up quite a bit, but we're shooting for the big dogs up on the porch barking. So that's it. The other one that looks really interesting right now was the one that we talked about just a little while ago, which was the head and shoulders pattern. Look at this thing. It's got 30 cents now, folks. Let's get this up here. Shucks. I think that was the weekly we were doing. It sure was, cowboy. Let's get it up here. Shucks. You know what it was? It was the December silver. Just a minute. I was using the actual March contract. What did I do? Oh, you know what I did? I put it over here. That's what I did. There it is right here. Okay. Now this thing now, folks, is trading below this line, 23.70. That means it has a 60-cent profit in it right now. And remember, it went to the exact price. 23.13 was the 618. The high was 23.14. We're now at 23.70, so that's starting to work. That's what we were hoping it might do, and hoping is not a very good word when you're trading, but sometimes it helps. That and prayer, they're two of my favorite oscillators that I use. So that's pretty much. I wanted to thank Stan for being on. We chat quite a bit, and we're both talking about the explosive move in these markets that we're seeing. We've seen this before, folks. If you've been around .com, if you've been around the big bubble in 1998, and then also the one that we had, I can't remember the one before that, but these are the things that we're looking at. I think we're at a major top, but the two that were short are doing okay. If you're in the NASDAQ, you're certainly out of that by a long shot, and the S&P is still hanging in. So live every day an attitude of gratitude, and may God bless. And our guest tomorrow is going to be Mike Moore of More Analytics, I believe. So stay tuned for him, and we'll see you on the flip side tomorrow. May God bless.